I think what you're saying then, Alex, is that ultimately the thing that reduces the price of residential property is supply. So we've got to look at the thing that creates supply, and you're suggesting what might create supply is when this so-called fixed rate mortgage cliff comes about.
Yeah.
I mean, it's not really here yet because I think...
No, I think we're lagged. I think we're 6 months behind it.
Correct. And I just think for the purposes of everyone listening that the first time that 2% or 1.99
and
fixed rate...
Everyone refinanced at that point, really.
Totally. Yeah. But the very first time it was offered was 1 March 3 years ago. The reason why that happened 1 March 3 years ago was because the Reserve Bank introduced this thing called Term Funding Facility for the banks, and they gave the banks $188 billion to lend as a fixed rate at 0.1%. The first fixed rate loans at 2% were first handed out in 2020, March 2020.
And how long did they last for?
3 years maximum.
But how long did that 2% period?
No, I went up. So
you got it from first.
Went up to the end of last year.
Yeah.
So it stopped last year. So those people are going to start rolling out now. So you're right. I mean, those fixed rate people are just starting to come out into variable rate as of the 1st of March.
Yeah.
It never started before the 1st of March. So the very first one's the 1st March 2020. They're now starting and so it took a long time for this really low fixed rate thing to catch on.
Yeah.
I mean, and as you rightly said, a lot of people went and fixed their rate. So they might have...
So even though it's gone up to 6, they're still on 2. Happy days. So what we're seeing is, like, we had an open house on the weekend in Clovelly. There's one house on the market in Clovelly, guide price at 2.8. We had 63 groups look at it.
Wow.
Which is triple what we would normally get. But if there was 5 of those on the market, divide that by 5. So all you need is...
Right.
And then you get one of those people that goes on the market and then they take 2.6 because they've got to take it. Then that resets the market.
Yeah, no, that makes sense because so what you're saying, in addition to all this, in addition to this mortgage cliff happening over time, starting from 1 March this year, calendar year, in addition to one of the other things that exists is there's been a shortage of properties for sale.
Exactly, yeah.
Because people could afford to hang on because the fixed rate hadn't turned into variable rate.